All right, ladies and gentlemen, on that cue, we need to begin with our next discussion. Well, the session will be conducted by the co-head and COO India Global KPMG in India. We're talking about Neeraj Bansal. Can we have a warm round of applause as we invite our curator and our session chair? Well, Neeraj, of course, being a senior partner with more than 25 years of professional experience, somebody who holds a strong relationship with member firms across ASEAN, HK, and Taiwan, and has played the role of a market maker. Thank you so much for joining us today on this panel and helping us in the curation. Next up for our panelists, somebody who has over 25 years of experience in the industry, is a visionary leader and a professional responsible for over $7 billion of investments globally with a focus on the Middle East and Asia. We're talking about the MD and CEO of Nisus Finance, Amit Goenka. Thank you, Mr. Goenka, for joining us. Next up, we're talking about somebody who's the founder and managing partner at Mount K Capital and the head of fundraising of Rustomjee Group. She's somebody who has over 14 plus years of experience in the real estate, finance and development fund management industry. Currently, she is the joint secretary of CREDAI and the convener for the banking at CREDAI National and CREDAI MCHI. May we now welcome Binitha Dalal on the stage. Come on, ladies and gentlemen, a bigger round of applause. Thank you, Binitha, for joining us. Next up, we're talking about a leader who heads the industry coverage for the real estate, REITs, consumer tech, retail, and hospitality verticals. Has been an integral part of the Access Capital. We're talking about the Executive Director, Access Capital, Nitin, Idnani. Thank you, Nitin, for joining us. An acquisition professional for 18 plus years, somebody who has a deep underwriting skill set, an executive director in the past at Morgan Stanley as well. We're talking right now about the director, Certus Capital and Earnnest.me, Sahil Shah. And somebody who heads the credit risk and asset management vertical at Motilal Oswal Real Estate and is responsible for monitoring the portfolio health, credit appraisal, asset management, divestments, and fundraising. Saurabh, Rathi, ladies and gentlemen, the MD and co-head real estate, Motilal Oswal Alternates. Well, with that, Neeraj, it's always a pleasure having you on the platform, and I'd leave it over to you for the curation.
Good afternoon, everyone, and thank you very much, for this time. And I really welcome my fellow panelists for their time and for the insights that they will share with all of us. So thank you very much there and that. Delighted to be here, and we have a very interesting topic as well: creating financing solutions. And we should not think too much on the word creative over here when we talked about real estate here, but still. It talks about out-of-box funds, alternate finance, and PE strategies. And this is something we'll try and unravel during our 40-45 minutes that we have for the session right now. But before we begin the session, if I were to just draw just 3-4 data points, not too much around it. So I think we've been hearing since the morning that the sector is kind of growing well, strongly as well. There is a good growth that is poised, from a sector perspective. And if you look at just because the topic is on the investment side of it, and if we were to just look at 2-3 data points from an investment side of it, I think it's been a good year so far. If you look at January to September, we've got almost $4.5 billion of investment flowing into the real estate sector, which is almost a 27% increase compared to last year. So far it's tracking well. And when you look at the investment flows by the segments also, then in the office segment as well, there has been a 60% increase. And the maximum share also, of course, goes to the office sector, which has been consistent in the past as well. So almost equivalent to $3 billion has gone into the office segment around it. Industrial and warehousing sector and the residential side, has got almost like 700 million each, so which is again has had a good growth, wherein the industrial and warehousing sector, which had of course become a very interesting and also something which is exciting sector for a lot of investment side of it there, though almost like 200% plus growth has been witnessed in this current 9-month period in that sense. So when we look at the this investment side of it, while there is a significant flow of investments happened, and it is an increasing trend, but at the same time, there is also still a dearth of capital, and we'll try and delve into our discussion today, and when we were having a chat before the session as well, I think there were 2-3 themes which are emerging in terms of early stage funding and the end stage funding, then also in terms of what's the mindset of a investor who's, let's say, an old timer in the real estate space as an investor, and also versus the young generation which is kind of coming in at this point in time. So we'll try and kind of get to some of that aspects of it. Of course, 50 minutes is not or 40 minutes is not that big a time as well, but we've got experts over here, and we'll try and kind of get some valuable points from them as well. So let me just start with Amit, you and Binitha, if I may ask you as well on that. In terms of, we just spoke about that there is a lot of investments coming in there. So when you hear that, Amit, like you've been a veteran in this area as well. So how do you see this? What is driving this as a higher investment compared to, let's say, last whatever couple of years? And also, is it a continuing pattern that you see? And also, if you can just add 1 or 2 elements which can kind of, also something which we need to watch out for, as well.
Thank you so much, Neeraj. Okay, I hope, are we audible to everybody? Okay, great. Thank you so much. And it's a lot of numbers. I couldn't catch all of it, so I hope all of you have caught it. But very, very large numbers. So much money coming into real estate. But, I'm really going to ask one quick question. How many people here think that there's not enough money available for real estate? By show of hands, despite all these numbers. Okay, so, okay. Thankfully, not too many, which means everybody has enough money in their pockets. Okay, that's good. So, that's less challenging than for us. So, which means everybody's happy, there's enough money coming to real estate. And honestly, we're just at the cusp of an extraordinary boom of how much capital more can come in the country. Neeraj has given some fantastic statistics at what has already come in the last year or two. But what we're going to see in the next 10 years is absolutely mind-boggling. And I think that's really the opportunity for India and India real estate at large, driven by 2 factors. One is the simple, sheer power of domestic money. Okay, the domestic savings is so large that today banks are not getting that money. They're raising money from capital markets, and all of the bank savings are going to managers and alternate assets and real estate. So we're talking of almost that amount of money, which is today at 135 lakh crores, going to 315 lakh crores in the next 4 years. Okay, that's over 2 lakh crores of new money coming away from banks, going into each one of our hands to put it to profitable use. Okay, that's a very large amount of money. Some of that will also come to real estate. Likewise, in AIF funds alone, we're going to see 6 lakh crores of AIF funds grow to 36 lakh crores. Even if 10% of that is in the next 3 years again, even if 10% of that is to real estate, which is today, we're seeing a very large number of 3.6 lakh crore rupees available only in AIF funds. So, I mean, the amount of capital that is going to be available domestically is very large. Why? Because it's a sheer consumption asset class. Everybody has seen in the last 2 years that real estate has become a mainstay investment category. It's become consumption-led. Everybody wants a home. People are happy to work from home. Work from home will continue for quite some time in the near future. Hence, residential owned housing is a very, very centric asset class back again for every consumer, every investor who's looking at this as a multi-growth product or a multi-growth opportunity. So I think from a domestic standpoint, there has been never a better time in my view. From a global standpoint, India's geopolitical positioning has clearly risen multifold times. India is a destination today. Nobody needs to understand what is India, who is India, where is India. I think that is a very large factor in the global landscape. Plus the challenges of Europe, the challenges of Middle East, and the challenges of our neighboring countries, which means that more capital has to come to India. So if you look at $54 billion is the money allocated to real estate in the Asia Pacific region. We were getting less than 5% of that historically. We think we will get at least 10% or 20% of that. You know, we're adding effectively another $5 billion annually only in Asia Pacific allocation for India. That's over and above domestic money. So the sheer situation in which we are as a domestic savings economy, as a global growing economic power, I think we are absolutely in the center of gravity when it comes to attracting the best of capital, the best of interested parties, and putting that money in the hands of the best of breed counterparties, developers, and asset owners. So I think that clearly is a very strong message on the wall for me. As we go out, we meet with global LPs, we meet with domestic LPs. I think it's a very clear communication, strong counterparties, enough capital is available.
I think, Amit, you've always been a path breaker in everything that you've done, and definitely I agree with your views. But I just want to say one thing. I think the pandemic has really made people understand the importance of real estate in their lives. Real estate is not an asset class. It's not just a home. It's not just an office. If you look at from the day humanity existed, real estate existed. Whether an industry existed or not, real estate were there. When it was way back in the caves, you know, in the cave times, or when you are saying tree houses, whatever, homes existed. People need real estate for their daily use. It's not an FMCG commodity. It's a very expensive commodity, but it's a very basic necessity that everyone has always had and part of their lives. Pandemic just accelerated the entire importance of real estate as a sector, a home as a sector, and the way people look at their lives on a daily basis and usage of real estate in that part. I don't think we need to, as Indians, sell India anymore wherever we go. You can go to probably a Bhutan, or you can go to Sri Lanka, you can go to the Dubai, you can go to the US, you can go to Europe. India as a story does not need to be sold. And real estate post the pandemic is an asset class that you really don't need to sell. The only thing that is important today in terms of a sector or what you do in this sector is what are you building and what are you delivering. People as an investor, whether it is globally or whether it is domestically, have become extremely mature to understand what either an AIF or a bank or a product that is being sold to them to invest in holds. Gone are the days Excel can sell. Gone are the days where you put out saying that this is my return, this is my projection. Put your money, you will get the money back. I'm not going to say it's twice bitten, thrice shy, or any time bitten, any time shy, but I think more than bitten, it is the awareness and growth pattern that someone has experienced in their life that make them take very informed decisions in terms of where they are putting their money. I think with the way the world has changed, whether it is the war or whether it is the way economies have evolved, as a country, we are exactly poised to be the third, the second, probably one of the largest economy in times to come. Because our country, as much as we may feel, our population and our upcoming population is the biggest boon that we have to support our domestic consumption needs. Which means whatever we build, at least domestically it will get consumed. If there is a consumption, there is a churn of money. As long as money gets churned, there is a growth. When growth happens, money will go to all sectors, including this sector. Today, real estate is contributing 7.3% of India's GDP, which is pegged to go to almost 15.5% in 2047. That growth and that need itself is showing the way this sector is going to grow and the returns that this sector will bring in with that amount of capital coming their way. So this is where my 2 bits as far as India and India's need of capital for this sector is coming up from.
Sure. Thanks, Amit, and thanks, Binitha, for that. Saurabh, if I may come to you, we just heard from Amit some astounding numbers And Binitha also alluded to the fact that India's story does not have to be told, even real estate story does not have to be told there. At the same time, she did highlight, some of the aspects that have to be considered as well on that. So when you look at this, and in your experience now, so 2 points. One is that if there's something to be added, specifically you think, of course, add from an India story perspective. The second is from this perspective, say that as investors, are the risks increasing? There are we going towards another hype, or there are ways the risk is getting better managed, mitigated than before?
So yeah, I think on the first point, definitely India is the darling of the globe today. Whenever we go out, meet people, we had to, as she rightly said, we had to first sell the India story, and then much tougher was selling the Indian real estate story. Because since 2005, when the institutional investors came to India, right up till possibly 2021, I don't see the investors made any kind of serious money on whatever investments they made. Now, whoever may be at fault in that scenario, it did not matter. No, because the eventual pain was felt by global investors as well as domestic investors. Now, what's happening is, I think, one very big difference that has come up apart from, the growth story that is there is governance. Now, not only at an India level, but also at a sector level. There's a lot of governance which the regulator has brought in, and regulator I mean not only RERA but also financial regulator, but also a lot of governance has been brought in by the developers, right? Some of the new age developers, some of the developers who have been there but second generation has come up, I think they genuinely want to do things in the right way. And that effort of last 3-5 years is actually reflecting in the way they have kind of come over the financial crisis that we see domestically, or COVID and the slowdown in business that we saw. I think most of these business houses have come back very strong. And that's where you see very clearly consolidation at play. So Indian real estate, 2017, the market share of top 35 developers roughly was about 17%. 2021, 22, it became 34%, projected to be 50% in next 3 years. It clearly shows that well-banked developers, well-regulated developers who are willing to go back to the drawing board and focus on what the consumers want, as well as what kind of capital is available and what transparency a lender wants. I think these are the guys who are probably the biggest beneficiary of what we are seeing today, right? Yes, I think in terms of size and scale, broadly, about $10 billion of land comes under production in the country, which means that is the market value of land on which projects are being launched. And almost close to that number, about $10 to $12 billion is the amount of money needed for construction. And this is only the top 7-8 cities in the country. Now, of course, the part which is there for construction, you have banks, NBFCs, HFCs, who are willing to fund by regulation, they can do it, and they're coming back to the market. But who funds the first $10 billion of opportunity every year? I think that is where a lot of focus needs to be brought in, not only from a developer perspective, but as a country as well, because that kind of demand cannot only be provided for by domestic institutions. And that's where the numbers that Amit spoke about become very, very relevant, right? Historically, through my personal experience, historically we have been raising about 5% of our capital every year from offshore investors. Last year we raised 17% of our capital from them. So there is interest, there is clearly governance, there is clearly an uptick in sales in terms of inventory overhang. You look at any number, you pick up any developer, most of the guys would have done highest number of sales, profit, revenues since their inception, right? Which again indicates that the requirement of capital will only grow multifold. So exciting times, I think exciting times to do business, and there's enough available in the pie now with the prices also stabilizing for everyone to have meaningful share in that business ecosystem.
Sure. Sahil, if I come to you, there, from a AI perspective, as Saurabh also mentioned on it, and Amit alluded to that also, that there is a lot of interest and a lot of increased, let's say, popularity as well amongst investors on the AI side of it. Now, as you are looking to more democratize that, from a participation perspective, right? What are the, what's been the experience, if you may share on that? And also in terms of when you look at this wider participation which is possible, what are the 2-3 reasons why that participation is, let's say, not happening at this point in time, and what can be done to kind of increase that?
Right. So, am I audible? I think. Okay. So, essentially, as far as foreign capital is
No, I don't think
concerned-
it's working. I don't think it's working.
Yeah. So, the one thing that that Saurabh rightly pointed out, the 10 billion in his example of capital needed for land or early stage, I'll call it risk capital, that is truly needed, doesn't exist. And especially now, even if you break it down further to let's say your asset classes, your two large asset classes, which is residential, commercial, right? Now, for every 10 or 15 square feet of commercial being built in the country, there is 70, 80 square feet of residential being built, right? Now, most of the foreign capital which is around or which has even come in, has come in into buying commercial assets, whether it's office, retail, industrial, some combination thereof, right? The amount of capital when you look at that has come into residential is almost inverse in terms of proportion of residential being built. So, and it is a function of the perceived risk as far as the foreign capital is concerned, of investing into that asset class. So where will that gap be filled? I mean, we actually firmly believe that that gap needs to be filled through domestic savings, domestic capital. Ultimately, that and AIFs as a vehicle taps by and large into that. Of course, AIFs can do foreign funds, and people are tapping foreign LPs, etc. But that is a vehicle which is largely used to tap domestic savings. Now, that avenue, I mean, you've got a huge pool of domestic savings which really has maybe I'm oversimplifying, but two options: put your money in FDs or debt funds, or invest in equity, right? The middle has not existed for a long time, and real estate as an asset class offers avenues to provide that, which is your things like REITs, which offer a debt plus type of product. Real estate credit, people call it private credit in real estate. We can call it that. Has a potential, if done correctly, to offer that middle. People, you can make 12 to 15% returns on relatively secured assets if done well. So it is this capital which needs to be channelized. It's AIFs. It's we are doing it in a little bit more democratized way. But ultimately, and SEBI is recognizing, coming up with regulation enabling that. It is ultimately this capital that needs to be channelized in an organized fashion to provide this liquidity for the sector. And in the process, the governance that he spoke about, the improvement and the level of players today that exist in the industry, they can almost create a following for themselves with these investors. Essentially, I'll give you an example of some of the more organized players, some of the more, or rather, let me use listed players as a proxy for the larger developers. If they are buying land today, they can tap into, let's say, a debt mutual fund or other private credit sources to source capital to buy land at probably sub 10%. Now that creates an arbitrage of 2x. I mean, that doesn't exist for the next level developer who is doing good business, who is still delivering the product, but that avenue doesn't exist for him. That creates a massive arbitrage for the listed guys. How do you close that arbitrage? They need to be able to tap into this, this domestic pool is what I feel.
Sure. Nitin, your views on this topic?
No, look, so I pretty much agree in part with what was said here. For me, funding for real estate has multiple cuts, right? There's foreign capital versus domestic capital. Foreign does not have the appetite for development. They want ready assets. clearly when we are trying to solve for funding for real estate, we're talking early stage. Because once you have your approvals in, there's money for you. So when it comes to early stage, foreign capital doesn't seem to be solving the problem. So now you got to turn to domestic. Luckily, with the upcycle, domestic capital is available. The AIFs are stepping up to the plate. You have HNI, family offices also turning over here. I've always thought that the availability of capital was never a problem. It is the pricing which is not in sync, purely because the risk perception is very high. Now, as soon as you say, I'm willing to take money to buy land at 18, 20%, there's a sea, there's an ocean of money for you, right? But that makes the project in itself unviable. So the pricing is wrong. The perception of risk for Indian real estate today is very high. Call it legacy issues, call it not enough of a profitable track record, call it what you may. I mean, this is going to probably correct itself. It already is, in part due to, branded players, a lot more getting listed, them having a track record of having a lot more corporate governance, better disclosures. All of that goes to improving the risk perception of real estate, which will bring the pricing down. Today, unfortunately, we are not there. Now, when you try and tap early stage funding and you try and look at domestic capital, again, you can look at institutional money or you can look at HNI money. Now, as Indians, we love real estate. I mean, there's a lot of capital that gets channeled into physical assets. HNIs understand this product like you wouldn't believe, far better than even some fund managers. To my mind, channelizing this domestic saving that was rightly spoken of in a very institutional manner for this early stage funding is what is required. And the REITs are a great example of how we've done it in the public markets, right? You took away all the risks associated with real estate that people had when they thought about investing in a real estate stock. Misallocation of capital, over leverage, all of that is not permitted in REITs by way of regulation. And that's now, after a lot of education, hit home with a lot of the retail investors. And they've come to to understand this product and have invested in it. Of course, we are in an increasing interest rate cycle, and in that regard, REITs probably don't perform as well from a capital appreciation point of view, and therefore, one can argue right now it still is a subdued performance. But as the interest rate cycle will turn again, I do believe that you will see this retail participation come through. And Binitha is right. I mean, in Singapore, you sit in a cab and the taxi driver will tell you which REITs he owns. So as and when that education comes to be among retail investors, you will see that kind of increased participation. To my mind, what is really needed is that the risk perception of the sector needs to be better communicated so that the pricing of these financial products is more of a win-win both for those putting the money there and those borrowing.
Sure. So, Binitha, if I come to you, we've spoken about some of the challenges which are being faced by the developers on the early stage funding around it. And the fact that, we're also speaking at the same time that there are creative financing solutions coming up as well. So, in light of that, are there, some aspects that you are considering or you are believing are making much more impact than they were making before from a early stage funding from developers' point of view?
So, I think just to take on from there, RBI has been extremely, extremely strong as far as NBFC/HFC funding for early stage products is concerned. It took out from the bank gambit of funding approvals about 3-4 years back. Last year, October, it ensured that HFCs and NBFCs also cannot fund approvals at early stage. So the entire banking sector, whether it is a bank, whether it's an HFC or whether it's an NBFC, until and unless you don't get a RERA approval, they are off your table as far as an option is concerned. we as an organization could see that much in it earlier. And I think that's why we launched the AIF as a platform where we thought that when you get into early stage or when you look at a project, okay, each stage needs different forms and different priced funding. Your early stage is something which is needed much in advance, but that funding at a particular cost doesn't need to stay until you sell your last apartment. You need to hedge that right, and you need to ensure that part is out of your project in terms of a return in a way in which it makes the project financially viable. Once you get your approvals, your cost of funding, your risk, the way you perceive an asset vis-a-vis the cost of funding definitely changes. And then once you're absolutely financially, I would say, you know, it's a very creative cliche that you need to have financial closure, and I think everyone would have heard this in the room many, many times. But in a way, if you are able to maintain your understanding of the risk, your understanding of the need of capital and the cost at which it is sustainable up to a particular time, and financial closure in its true sense, not the way it is actually used today, projects do make money. I think all of us got very creative and changed the way we assumed capital needs, capital requirements, and project funding. And that's where there has been a learning curve that the sector has reached. But apart from an AIF, which is today's sector and today's solution which real estate developers are looking at for early stage funding, we are definitely not looking at innovation that's coming to the sector, both for financing, capital needs, and so on and so forth. As, you know, crazy as it may sound, but blockchain, tokenization, fractional ownership, you know, even for that matter, mutual funds looking at coming in through listed NCDs in a large way, it definitely will happen. Because if this sector has to reach a particular value of India's GDP, the need of capital is extremely large. And that need of capital cannot get funded by the biggest AIFs in the country also today. So people will find their ways of doing it. I see tokenization coming in. I see GIFT being very advanced as far as that regulation is concerned. I see fractional ownership growing in a very large way. There are a lot of startups today that look at doing crowdfunding / creative funding for asset classes which are completed in second homes. Nothing stops that model from coming into the early stage need of a developer. And the minute you reach that early stage need, whether it's a luxury asset or whether it's a affordable asset, everything else is just a matter of how you manage your cash flow. As long as we can get creative in getting to managing cash flow and not using our creativity to use our cash flows all over the border, all assets in the real estate sector will make money. So yeah.
Okay. So I think that's a very good segue to kind of get to the other segment as well, to say that if you were to focus on the young investors right around it, and say that that how the participation has been and how it can be increased further. So Amit, if I ask you, and then Saurabh, if you could also highlight some of your views as well, to say that what are the risk considerations, or are different considerations that a young investor has versus what we have seen before, and also in terms of driving that participation further, is the industry doing enough, on that?
So fantastic idea, and I think Binitha has very, very sharply brought focus to this idea. When you talk about tokenization, when you talk about blockchain, when you talk about sophistication of real estate investment asset classes, either through REITs or AIFs or MSME REITs or tokenization, I think that's really where the next gen or the Gen Z is really going to focus on. They're very technologically savvy. They need things to happen on their phone. It needs to be able to happen instantaneously. And unless these technological innovations and interventions don't move to that level of growth, sophistication, and availability, I think there will be sparse participation from the next gen. Clearly, the interest is very high, right? So people do understand the opportunity. Everybody likes real estate. They think it's a great asset class. It is something which is worth doing. It's physical, it can be seen, it's an investment of pride, but it still is limited in terms of avenues. So I think that's clearly, so the number of people, for example, who came into fractional platforms or token platforms are very large. Small amounts of money, to buy some pre-leased warehouse, to buy some pre-leased office space, to buy some other asset class. That's so, where there was a very large volume that really got garnered. And if it moves to the MSME REIT, that again becomes very attractive. So I clearly believe that with the advent of the regulatory environment also now moving in pace with the technological and the market needs, we will see a lot more force in that direction, a lot more capital formation by the young investors in that direction. So far, it's largely been limited to older families, larger families, HNIs, family offices, institutions, mutual funds, and so on and so forth. But I think that gravity will also shift towards the wider audience, in a very short period of time, I think.
Okay. Saurabh, your views?
So I think I'm pretty sure, and I'm aligned to the view that we will reach that space, wherein, we get into the sophisticated way of raising capital, reaching the length and breadth of the country, using technology to leverage that kind of access. My only worry though is, in my humble opinion, I don't see that happening in next 3 to 5 years, right? For us to reach there, we'll continue to need the glucose of, if I were to say, the glucose of early land investing for the next 3 to 5 years. That again brings us back to the same debate of domestic HNIs versus offshore capital. But I think one important aspect that probably I would like to add is on two aspects. One, there's generally a lot of wealth creation in the country, right? Definitely the way our economy is, the wealth first gets created at the top of the pyramid, right? That's a very large, small base, but very large volume. We see a lot of entrepreneurs, promoters, traditional promoters, unicorn founders, these guys from the very beginning setting up family offices or getting in talent who can actually price the risk that an advisor or a manager is taking, right? So there is, I've seen a tremendous amount of learning curve on behalf of the investors, that they are far more informed today on what kind of risk they are getting into, right? I've seen times where people, the concept of risk-adjusted return was very alien, right? Now they understand, okay, if I'm getting into a REIT kind of a product, on an entry yield basis, I should expect to make 6-7%, right? And probably in a long-term basis, maybe you can correct me, but maybe in a long-term 3 to 5 year basis, I should expect maybe an early double-digit kind of a return. Earlier, what used to happen was, even if I'm taking a early-stage land risk, people used to say that it's real estate, I need 20%. If I'm doing a post-approval project, I still need 20%. If I'm doing a pre-leased asset, I still need 20%. Those things have materially changed today, right? And now that is also percolating to the new age investors. Again, a word of caution there from my side would be, so we spoke of co-ownerships, right? Strata platforms and all. I think we have now got regulation there. But when we get into, and we are still in early stage, when we get into this democratization of credit piece, where it is the opportunity to invest and participate is available with everyone, I think we'll need two big investments. One is a lot of licensing with the regulator, right? Because once this is like a multi-billion-dollar opportunity from a product perspective. If this comes in early and the regulation only follows, there will be a significant catching up, right? And second, these are guys who will drive this kind of volumes will be middle class guys, not the HNIs, right? They're ensuring that their capital is preserved and the returns are largely in the line that is being guided becomes very, very important, right? So I think a lot of effort will come in there over the next 3 to 5 years, and that is when I feel that journey of a broad-based capital availability being there will happen.
Okay. Anyone wants to add more point to this? Otherwise, I'll go to...
I want to add, I actually do. The thing that you said, that all the unicorns and sunicorns and promoters are making family offices, the most striking part is that they are putting the next gen into family offices and they're continuing to own their businesses.
Yeah.
So the next gen's ability to be a decision maker in investments of various products is going up. And to that effect, I have seen schools giving kids projects where they have to take an investment decision by hedging risk. So the learning of risk, understanding of risk to the next gen is coming up very fast. And their awareness today, being in a digital world, is much larger. We may all feel today AIFs is your answer to early stage funding. But believe me, we will be talking a different language in 3 to 5 years, because the intent of the government to make investing as a decision faster, regulated, because that's why fractional ownership got the regulation when it didn't exist for that long, and to make it structured for the domestic investors at large as well as the international investors by setting up the GIFT platform is much larger. And whatever you may see today, the average age of first home buyers has come down drastically in the country. Today your first home is being purchased at a 25 to 27 years age, which was not the case earlier. So with time and the wealth generation that you see, the next gen is going to be a very large decision maker in this thing, and that's where I see investments, decision making also being driven by them as a product.
And some amount of innovation, it's not only for the manufacturer, the guy who's giving the money. A lot of innovation is also happening at the developer level. One, of course, the panel spoke about how a smart developer has realized that he has to ensure that his cost of capital keeps going down as the project maturity improves, right? And we have looked at so many structures now. Of course, the most often implemented structure is mezz credit, right? But then last 3 years, as the balance sheets have become stronger of the developers, we have looked at, and Amit can also vouch for this, I think we have looked at so many senior junior structures. That's also an alternate way of reducing your cost of capital, and which makes the projects viable. We have looked at so many structures where at right kind of developer partner, the AIFs are willing to take equity risk, equity oriented risk, may not be pure equity today, but equity oriented risk, where we are okay to take certain amount of pricing risk, certain amount of velocity risk, certain amount of approval risk. So for the right set of developer, I think there is enough and more optimum priced capital available. And that will only grow as the industry is maturing.
And that's something which Binitha alluded to as well, in terms of how the priced structure kind of works out from a capital point of view there in that. So if I may come to Sahil, to you as well as Nitin in that bit, ultra HNI population also is expected to grow phenomenally, and of course there is a good set of younger lot also part of it, with unicorns and other perspective coming in there. But if you were to target the ultra HNI population effectively, what is the scope for further innovation or further, let's say, product perspective from or what's happening at this point in time also new, from attracting that kind of investor into the real estate domain and around, because for them also there is, several options available, right? So why real estate continues to be a, let's say, a preferred or a increasingly more important option?
So first of all, I think it's in the genes. Like I said, Indians love real estate, so that flows through to the next generation as well. So I think there are enough stories of people having made their wealth in real estate. And, to the point of the generation next playing a very important role in fueling real estate, absolutely. I mean, I second all of those points about the Gen Z making more, taking more of a role in family offices, in capital allocation. Real estate is, a sector which I think, it takes a little bit of a while to ensure that you're not getting it wrong. It's a fairly easy sector to understand, but in order to price it right, etc., I think it takes a bit of time and effort, and I see the next generation actually putting that in. So, I mean, they better get it right. I mean, it's the sector is growing so fast, there's going to be so much need for capital that the strata purchases and the tokenization and the digital sort of currencies that will be used to purchase or provide the capital is going to be really important. I mean, to me, it's like the analogy of Mumbai roads, right? By the time the roads get built, there are more than enough cars to make sure that the traffic doesn't move so much. So similarly in real estate also, I think the capital need is going to be so much that if these alternate platforms, if they don't come to be, again, we'll face the same problem.
I mean, I think, I mean, as far as Ultra HNI is and the top player is concerned, they've always had options, to invest in various asset classes. Why only real estate, right? And historically, they've preferred direct ownership, or at least direct ownership forms a large portion of their allocations. That is increasingly changing towards more financialized ownership, whether it is REITs, whether it's AIFs, whether it's other other asset classes. I mean that acceptability of having a professional intermediary or a manager in the middle is more widely accepted. And it is now being truly looked as an investment as opposed to a asset. I mean, just an asset which you want to own forever, right? So I think that's one change. Though I feel the true innovation needed is in the layer below. How do you tap? I mean, you see, the top segment has always been well banked in this country. They have always have avenues and access. It is the middle class and below. That is where the innovation. I mean, that is where the numbers are, and that's where the innovation is needed to reach them. Education and regulation, which is coming through as we. I mean, thankfully, SEBI has been up the curve on that. But that is where the true innovation needs to happen. I mean, and some of these, whether it's democratization, tokenization, in simple parlance, that is simply breaking down the large investment size that real estate inherently requires into smaller bite-sized pieces. I mean, and that is what is needed for wider participation in the sector, right? And second is better management and organized management. So I think, and third is just innovation is needed in just reaching to them. I mean, we are a large country, length and breadth is huge. Just reaching to them also needs innovation, and that is where some of these digital channels come into play.
Sure. Just the last question in terms of maybe to all around it, So any one major thing that you think is, a bottleneck which the government needs to resolve or a regulation needs to change, which will, make it, one is, of course, accelerate the investments and also, also protect the investor capital as well there. Is there anything which comes to your mind that one thing which needs to really make it happen there?
Lots of things. I think it took a lot of time for REITs to see regulations in their favor. So I think when you talk about smaller investments coming in, then obviously you need the regulator to allow that. They've pretty much shut down a lot of the things. They're trying to regulate a lot of the aggregation platforms, tokenization platforms. So I think if there are avenues that they can create which are regulated, tax-friendly, provide the pass-through mechanism, and also allows global capital. I think the biggest bottleneck I see is the constraint that global capital has, either through an FPI route or an FDI route or an asset purchase. So there are too many constraints. If you open up the avenues for global capital to just simply come in, invest, make the returns and go back, I think that will solve bulk of the problems because there's enough money available globally as well. So if one thing I would ask for is just open the floodgates of global capital to easily invest and go back. I think there's just too many bottlenecks, ECB not allowed, FDI, too many constraints, FPI, too many constraints. So I think if you can take away all of that, I think that'll be great.
So floodgates. All right, Binitha, over to you.
I think I genuinely think there should be two major things that the government should definitely do. Firstly, I think when you look at the minimum barrier for a person to invest in an AIF, it's about 1 crore. I think that should get regulated to half. That will open up a lot more serious guys to come in the first time, go through it, and then come the next curve. Second thing is, I don't think people largely know, but affordable housing doesn't get any amount of SOPs from the government. It just gets a tag. You don't have any tax benefits, you don't have anything in terms of, as a financial institution, when you put money in affordable housing, in terms of a risk reallocation in the banking system, because they don't look at affordable housing as affordable housing lending, where they get any amount of tax SOPs on the cost of borrowing or the earnings that they gain on while they, you know, give loans to them. Nor do they look at affordable housing as a separate asset class. They look at it as plain, simple, vanilla commercial real estate. So today, when you're looking at an affordable housing project, your lending rates or your borrowing rates for a developer are at par with any other residential project in the country. So I think something needs to be done there so that the boost and the need to create affordable housing becomes affordable for the country. Today, it is absolutely unaffordable to make affordable homes. So I think that's something that the government should do, and definitely I think bring down the AIF minimum commitment to about 50 lakhs.
Sure. Thank you. Nitin?
No, I kind of would echo what Amit said. I think, you know, capital should be freely allowed to go where it's needed, and I think foreign capital should definitely should not be impeded by regulations, at least in terms of finding its way into Indian real estate. Today, if you ask even, you know, not just investors or financial investors, but even strategic developers from other global geographies, they would love to kind of look at India. And I remember, you know, meeting somebody very recently who said that the number of meetings that he has done with foreign strategic developers in 23 has been far higher than ever before. So there's a lot of interest for foreign developers also to come to India. I'm not saying you open the floodgates to them as well, but with the right checks and balances, we should do whatever we can to attract that capital. Because, you know, the biggest chunk of a project cost is capital. And if that is solved for, then a lot of the affordable housing becoming more affordable becomes that much easier.
Interesting. Where is that?
No, I think, I mean, I mean, the real estate, as far as the sector is concerned, I think the panel has covered on allowing more. I mean, I'll touch upon allowing more innovation and other ways to get into the sector. I think the regulators need to take, you know, allow innovation, you know, and not just try and what should I say, have restrictive regulations, etc., which they've been doing. I'm not, but I think that is the what needs to continue, and that is how you will see. I mean, there is a vast talent pool in this country. That is how you will see people coming up with newer ways to try and solve the Rubik's Cube.
So I think a couple of points. One, infrastructure status is important, right? As consolidation is going up, it is right of some of these developers who have steadied their ship, right, to be able to access significantly cheaper source of capital, right? You have to have competitive markets. That is one. Second, I think it's not only about financing, but when Binitha spoke about affordable housing, at least to my memory, not a single name comes, which is a success story in real estate, whose entire business model is located around affordable housing. There's hardly any. There's hardly any, right? There's hardly any, right? For the kind of country we are in. So there possibly it's not, the problem is not only financing, the problem could be somewhere else as well, including approvals, including land, you know, and there could be innovative solutions where some of the established developers kind of get certain incentive if they are able to deliver something on the affordable housing piece. And I think third, though we did not touch bit on this panel, I think the work is underway, but if specifically for real estate under the IBC, you know, there could be specific provisions where the resolution can be project specific and not company specific, you know, that will create a lot of transparency, a lot of comfort for anyone who is coming in large stage to revive the project. I think that's also a very important reform that could happen, it's underway, is what I understand.
Sure. No, very interesting points, and so thank you very much for that. So maybe we can just, if possible, can we take one or two questions if anybody has a question? If you could just raise your hand and. All right, so we don't have any questions. Our panel was pretty clear. So with that, ladies and gentlemen, thank you very much for your patient audience with us, and also to my fellow panelists. Great listening to you, and thank you for sharing your views on the the real estate financing as well as different dimensions of that as well. Certainly, there are a number of takeaways, and the last part of it certainly there are things to work on as well. So thank you very much.
Thank you so much. Ladies and gentlemen, a warm round of applause for all our panelists. And with that, if I may request the founder of Propacity, Rahul Bansal, to kindly join us and help us with the felicitation. Let's have a warm round of applause for Rahul. Rahul, thank you so much. And may we request you to help us with the felicitation. Firstly, thank you so much, Neeraj, for joining us and helping us with the curation. Neeraj and Rahul, if we may request you to step forward, both of you, and let's try and get a good shot of both of them. Thank you so much, Neeraj, for helping us with the curation of the entire panel. Thank you so much, Amit, for your valuable insights and joining us on the conclave today. Ladies and gentlemen, let's shower our applause for our leaders today. Thank you so much, Binitha, for joining us on our conclave today. Let's give Binitha a warm round of applause. Thank you so much. Nitin, thank you for joining us in the conclave today. Let's give a warm round of applause to Nitin. Thank you, Sahil. And thank you so much, Saurabh. What an excellent discussion, ladies and gentlemen. Great round of conversation from all our leaders, and may we request all of you to please come together. Rahul, if you can just stay back with the panel. Let's try and get all of them in one shot together. Come on, ladies and gentlemen, let the applause continue. An excellent discussion right there.